Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 3rd of October 2020, and we're publishing our gold and silver weekly update for the week ending the 2nd of October. We're also looking at other events such as political events which could shape what happens to the US dollar and therefore precious metal prices this coming week. Gold rose $40 last week from $1,861 to $1,901, having hit a high of $1,917 and a low of $1,850, a rise of 2.1%. In sterling terms, gold finished the week at £1,469. That's up £9 or 0.6%. And in euros, it closed at €1,622. That's up €22 or 1.4%, thereby showing the strength of sterling. Silver rose 86 cents, rising from $22.92 to $23.78, having hit a high of $24.42 and a low of $22.56. A rise of 3.8% following last week's 14.6% fall. In sterling terms, it closed at £18.39 an ounce, up 41 pence or 2.2%. And in euros, it closed at 20.31 euros. That's up 0.61 euros or 3%. The gold to silver ratio fell from 81.2 to 1 to 79.9 to 1. Bitcoin is currently standing, for those interested, at $10,523, down a reasonable amount compared with last week. Now, the Dow Jones closed on Friday at 27,628, which was down 134 points on the day, but up 455 points on the week. The S&P 500 closed at 3,348. That's down 32 points on the day, but up 50 points on the week. And the Nasdaq Composite closed at 11,075, down 251 points on the day, but up 162 points on the week. So Friday, a negative day for equity markets in the United States, but the week positive. Brent crude closed at $39.27. Now that's down $2.55 following the previous week's fall of $1.33. And WTI crude closed at $37.05, down $3.20 following the previous week's fall of 86 cents. With both crude prices now below that important $40 level. The dollar index stands at 93.84, and that's down 0.73 points on the week. Now, for some weeks we've stated that we expected gold to consolidate within a trading range of between $1,800 and $2,000, and so far this has still continued to hold. A $200 spread between envisaged highs and lows is not really that great a percentage at these levels. Potential 10% swing, even in the gold markets of late, is not that great an obstacle to overcome. Silver, we predicted last week, would oscillate between a slightly larger range because of the dramatic fall that we had seen, of $20 at the lowest end to $25 at the upper end, though accepting the fact that somewhere in the middle would be more or less where it would settle. Now, we were expecting quite a lot of volatility in precious metal prices this past week, simply because of the plethora of data being announced in the United States. The prospect of a stimulus package either being agreed or not agreed, and us being more wise in terms of what has been announced by the Congress, and 3 jobs reports suggesting that either the economy is growing, declining, or plateauing. So, let's take a look at the economic data that was announced, and this will suggest to us why we saw some oscillations in gold and silver prices and changes in dollar value last week. On Tuesday, we saw the advanced trading goods for August move from minus 80.1 billion in July to minus 82.9 billion in August. The Consumer Confidence Index actually rose for September to 101.8 compared with 86.3 in August. But we are more interested to see what October's figure will be, whether that confidence actually continues. On Wednesday, we saw the ADP employment report showing a rise of 749,000 jobs for September compared with 481,000 for August. Whilst positive, for many it was disappointing and a precursor to what the non-farm payrolls were likely to declare on Friday. GDP revision for quarter 2 showed a minus 31.4% figure compared with the previous minus 31.7%. And pending home sales index were up for August at 8.8% compared with the previous 5.9%. Sorry about all these figures, but they do actually paint a trend of sorts. On Thursday, we saw total initial jobless claims remain unmoved at 1.44 million. Personal income for August was down 2.7% compared with a rise of 0.5% in July. And consumer spending was down, though still positive, at 1%, that's plus 1% in August, compared with plus 1.5% the month prior. Core inflation remained unchanged for August at 0.3%. The ISM Manufacturing Index for September stood at 55.4% compared with 56% in August, and the Market Manufacturing Index was also down slightly at 53.2 compared with 53.5. So although a not dramatic decrease, nevertheless a decrease and not an increase. Then yesterday we saw the non-farm payrolls come in at 661,000 new jobs for September compared with 1.489 million in August. Though we have to admit the unemployment rate technically improved at 7.9% compared with 8.4%. Average hourly earnings fell from 0.3% in August to 0.1% in September. So the non-farm payrolls were disappointing, as to some degree indicated by the ADP report on Wednesday. However, on a positive front, the Consumer Sentiment Index rose to 80.4 compared with 78.9 in August, which gives an indication of how consumers are feeling still. However, factory orders for August fell sharply compared with July at a positive 0.7% compared with a positive 6.5%. So a mixed bag of results, but frankly, the key data showing us a slowdown in economic activity and employment growth. Now this clearly affected markets, the dollar and precious metal prices. The effect, though, was not considerable because the figures were not significantly divergent of expectations. But we would contest that next month could and quite likely will be more marked and therefore potentially have a greater impact. So, going back to gold, up $39 or 2% on the week. Initially on Monday it opened briefly up and then fell back quite quickly, only then to adopt a rising trend thereafter, peaking in the early hours of Friday morning and closing just above the $1,900 level. For predictive purposes, we would have preferred gold to have closed above $1,910, as hovering around $1,900 can suggest it will move either way on Monday. All things being equal, that is, but we all know that all things are not. On the one hand, we should be pleased that gold has recovered to this level, but we cannot help but feel a little disappointed that with a presidential election due in just over 1 month, the president himself and his wife catching the COVID-19 virus, and disappointing really employment figures, therefore potentially hastening a stimulus package from Congress, should have perhaps propelled gold higher than it did. Now, it is quite possible that we could actually see gold fall back to the 1850 level unless something spurs its momentum early next week. Now, technically, support is seen at the 10-day moving average of $1,887 and resistance at the 50-day moving average of $1,945. Medium-term momentum is negative, but short-term momentum has turned positive, with the fast stochastic showing a reading of 39. Frankly, looking at the technicals, it is really quite difficult to predict the next move. Some indicators suggesting a slight rebound and others suggesting a potential move downwards. Now, please bear in mind we're talking short-term moves here. The level of money printing and economy support via various QE programs will, in our view, lead to even higher precious metal prices. But that's more medium-term than necessarily very short-term. Silver this week is up 3.7% or 86 cents, but this is admittedly after a dramatic fall last week. It more or less followed gold's trend, except that it actually peaked on Tuesday rather than gold peaking on Friday. Some technical analysts are of the opinion that silver will in fact fall back to the $22 level again, and possibly, just possibly, may even settle at $20, which is where the 50-week EMA rests. If silver can manage, though, to break the next resistance level, which is seen at $24.15, we could see it rise quite quickly to $24.70, or the 50-day EMA. $24.85 is then the next major resistance level, so it's only 15 cents higher at 20 EMA, which is why we are broadly comfortable stating that we believe that $25 is the top of our range at present. Any fall below 23.30 will likely see silver prices grind down towards 22.30, which is the next support level. There are three factors that are likely to affect this week's prices. The value of the US dollar, of course, that's a given. Economic data, which in itself will affect the value of the US dollar, and the health of President Trump. Looking at economic data announcements this coming week, we have on Monday the Market Services PMI for September and the ISM Services Index for September. That'll be quite noteworthy and will either support what's happened in manufacturing or not, as the case may be. Tuesday, trade deficit for August and job openings for August. Wednesday, we have the FOMC meeting minutes. They will prove most interesting, although we suspect will not be particularly divergent from what's already been announced by Jerome Powell, the Fed chair, and the other governors of the Federal Reserve. And we also have the consumer credit for August. Now, on Thursday, the weekly jobless claims report, and on Friday, wholesale inventories for August. So unlike most weeks, where most of the important and economic data announcements are towards the end of the week, this coming week it's towards the start and middle. Of course, though, all eyes will be on the FOMC minutes and any change in the weekly jobless claims. So it's our contention for this coming week that we're likely to see gold vacillate still within our $1,800 to $2,000 level, and silver, yes, we're very comfortable in 20 to 25, though we suspect we're more likely to see a tighter range of between $22 and $25. So, unfortunately, we're not too excited about prices in the very short term. If anything, we see silver potentially weakening as further lockdowns occur, the coronavirus spreads further, and industry becomes affected. while we do see gold maintaining a degree of strength, particularly if the economic data is poor, thereby suggesting a fall off in industrial demand for silver, but a maintenance of the monetary demand for both metals, which gold will benefit more from in the short term. That said, should President Trump's health deteriorate and become seriously life-threatening, then that may indeed move markets. The question, though, is in which direction? Because when the announcement that he had contracted COVID-19 was made, we actually saw the dollar rise. We are also watching for any congressional stimulus announcement, though we're not, quite frankly, holding our breath. But who knows? What do you think? Do share your thoughts. Meanwhile, thank you so much for listening. And if you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so that you're notified of our videos as and when they are published. We also published a video last night on the Richard and Greg channel, particularly and specifically about the implications of President Trump's ailment. Finally, we wish you a safe, enjoyable, and prosperous weekend and week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.